You open a brown envelope at the kitchen table, put your glasses on, and there it is in black and white. Overpayment. Review. You must tell us. For a second, your heart drops. Not because you know you have done anything wrong, but because the wording feels heavy straight away. There is a date at the top. There may be an amount on the page. There may be a line that sounds as if money could be taken back. And when you are already watching every bill, every food shop, every direct debit, that kind of letter can turn an ordinary morning into a very long one. This is happening to more people now, especially as DWP checks, reviews, and benefit records change going into 2026. And one of the hardest parts is that many people do not know why they have been contacted at all. They think, surely this only happens if someone has hidden money or given false information or done something deliberately dishonest. But that is not the full picture. A lot of these problems begin in much quieter ways. A change was never reported because nobody realized it mattered. Old information stayed on a claim for too long. One benefit office was told something, but another was not. A record was corrected late, or the DWP itself made a mistake and only picked it up later. That is why these letters can be so upsetting. They seem to arrive out of nowhere, yet the issue behind them may have been building in the background for months, sometimes longer. And for older people in particular, it is easy to see how this happens. Life changes, a partner dies, someone moves in for a while, savings shift from one account to another, a small inheritance comes in, a pension payment changes, a person spends time away helping family. None of that feels like fraud, most of it feels like ordinary life. But if a benefit depends on your circumstances staying up to date, ordinary life can still affect what you are paid. That is the key idea running through all of this. Benefits are not just decided once and then left alone forever. They depend on information staying accurate over time. So when a letter arrives, it usually means the DWP is saying one of three things. It may be saying, we think something was paid that should not have been. It may be saying, we need to check your details. Or it may be saying, your award is due for review under updated rules. That is why the letter matters so much. Not because every letter means disaster, and not because every contact means you will owe money, but because the letter is often the moment when a background issue becomes an official process with dates, decisions, and possible consequences if it is ignored. This is where many people get stuck. They look at the page, feel overwhelmed, and put it to one side for later. They tell themselves they will deal with it after lunch, or tomorrow, or when their son or daughter comes round, or when they feel calmer. That reaction is completely understandable. Official letters are often badly written for real human beings, but with DWP decisions and reviews, time matters. The wording may be confusing, yet the clock can still be running, and that is why it helps to stop asking, why me, and start asking, what process is this actually about? Because in 2026, there are 3 pressure points that are catching many people off guard. The first is the overpayment letter, where the DWP says too much benefit may have been paid and recovery could follow. The second is financial checking, including closer attention to savings, capital, and account information for some means-tested benefits, such as pension credit and housing benefit. And the third is the change in how PIP reviews may work, with longer review periods for many people, but still a duty to report relevant changes when they happen. Once you see those 3 parts clearly, the letter in your hand starts to feel less mysterious. It may still be stressful, it may still need action, but it stops being a blur of official language and starts becoming something you can break down step by step. And the first step is understanding exactly what an overpayment letter really means, because that is where many people lose valuable time without realizing it. When that overpayment letter lands, the first thing to know is that it is not just a demand for money, it is a decision. The DWP is saying that, in its view, you were paid benefit you should not have received for a certain period. That matters because the letter is not only about repayment, it is also the point where the deadline to challenge the decision may begin. That is where people often lose ground. They see the amount first, they panic about how they could ever pay it back, and they miss the more important question at the start, which is whether the decision itself is right. An overpayment can happen for different reasons. Sometimes a change was reported late. Sometimes information on the claim was incomplete. Sometimes there was a misunderstanding about income, savings, or who was living in the home, and sometimes the DWP itself may have made an error and only corrected it later. So an overpayment letter is not the same thing as an accusation of dishonesty. Very often, it is simply the first sign that what is on the record no longer matches what really happened. That is why it helps to slow the letter down and look for 4 basic points. Which benefit is it about? What period does it cover? What change does the DWP say affected the claim? And how much do they say was overpaid? If any of those points are unclear, that is important in itself. You will often have 1 month from the date of the decision to ask for what is called a mandatory reconsideration. That simply means asking the DWP to look at the decision again. It is usually the first step if you think the facts are wrong, the dates are wrong, the amount is wrong, or the explanation does not make sense. If you wait too long, recovery may move ahead while you are still trying to work out what happened, and recovery can begin in different ways. For some people, it may mean deductions from ongoing benefit. For others, it may mean being asked to make repayments. That is why putting the letter in a drawer and hoping it will sort itself out can become expensive very quickly. Underneath all this is another change more people are hearing about now, and that is financial checking linked to banks and building societies. This can sound alarming, but it helps to understand what it usually means. These checks are meant to identify signs that information on a benefit claim may no longer be accurate, especially for means-tested benefits, such as pension credit or housing benefit, where savings, capital, and income can affect entitlement. That does not mean a bank flag automatically proves anything. It does not replace a proper decision, and it does not mean every person contacted has done something wrong. What it often means is that something has shown up which the DWP thinks needs checking. A very ordinary example might be an inheritance paid into an account, or money moved from one savings account to another, or a pension lump sum taken out, or even an old joint account but is still open and still visible on records. Many people would not think of those things as hiding money. They may simply think, that is my business, or they already know about that. But benefits do not always update across different departments, and one change reported in one place may not flow through to every claim. This is where everyday life catches people out. A change of address, someone moving in, a partner dying, income going up or down, time spent outside Great Britain for longer than expected, a pension withdrawal. Small details can affect means-tested benefits much more than people realize. So the real risk is not only dishonesty. Very often, it is silence, confusion, or assuming that one office has told another. And once you understand that, the next question becomes much more practical. If the letter is about a review, a savings check, or a change in your circumstances, what exactly are you expected to report, and which kinds of changes most often lead to trouble later on? A lot of the changes that cause trouble later look small at the time. A son comes back home after a separation. A daughter stays for a few months to help out. You move money from one account to another because the interest rate is better. You take a pension lump sum to pay for repairs. You inherit a modest amount after a relative dies. You stay with family outside Great Britain longer than you first planned. None of that feels dramatic. But for benefits, small life changes can matter more than people expect. That is especially true with means-tested help, such as pension credit or housing benefit. Those benefits can be affected by savings, capital, income, who lives with you, and where you live. Even a change that feels temporary can still be relevant. And one of the most common misunderstandings is thinking that if you told one part of the system, then every benefit linked to you must already be updated. Often, that is simply not how it works. So if you receive a review notice, it helps to think in a very plain way. Has your money changed? Has your household changed? Has your address changed? Has your income changed? Have you been away for longer than usual? Those are the kinds of questions that sit behind many of these letters. And if a letter does arrive, the most useful first step is not to panic and not to rush straight into paying money you do not yet understand. The first step is to read the notice carefully and look for the date. That date matters because time limits matter. If it is a decision letter and you think something is wrong, the usual time limit to ask for a mandatory reconsideration is 1 month from the date of the decision. That 1 month can pass surprisingly fast, especially if the letter sits unopened or if you read it once and put it aside because the wording is hard to follow. So it helps to do something simple and practical straight away. Keep the letter, keep the envelope if the date is relevant, make a note of any phone calls, write down the name of the person you spoke to, the day, and what was said. If you send anything back, keep a copy if you can. Those small habits can make a big difference later. Many people lose their footing not because their case is weak, but because the paperwork becomes hard to prove once time has passed. And if the notice still does not make sense, that is the moment to get help early. A welfare rights advisor, citizens' advice, your counsel, or another support service may be able to help you understand what the letter is really saying and what your options are. That can matter before deductions begin, before a repayment plan is set, or before a deadline quietly expires. Then there is PIP, where some people may hear that review periods are becoming longer. On the surface, that sounds like a relief, and for many it will be. Fewer routine reviews can mean less form filling and less stress, but it does not mean the claim becomes something you never need to think about again. PIP still depends on your current needs. If your condition or daily difficulties have worsened, you may be able to ask for a change of circumstances review. And if things have improved, that may also need to be reported. Because if an award continues at the wrong level for too long, overpayment problems can appear later. So a longer review period can reduce disruption, but it also makes honest, up-to-date reporting more important, not less. That brings it back to that kitchen table and that brown envelope. At the start, it can feel like the letter means the whole matter has already been decided and there is nothing you can do. But very often, the real job is calmer than that. Check the date, check the reason, check what change the letter is talking about, check which benefit it relates to. And if anything looks wrong or unclear, get advice before the situation hardens into deductions, repayments, or missed rights. After 50, protecting your income often comes down to the same steady habit you use with pensions, bills, and medicines. Pay attention to the details early, not fear, not panic, just calm, methodical attention, because that letter on the table is not only a threat. Sometimes it is also your chance to put the record right before a small problem becomes a much bigger one.